What's going on, traders? Welcome back to my YouTube channel. I hope you're doing well. What a fantastic day it's been this morning. The volume seemed to be a little bit slow during the London session, but moving in towards the middle of the London and the start to the New York Open, we had really good signs of USD weakness that we was able to take advantage of. And we had an absolutely epic live trading session today. Some really great trades called out and some really great trades taken. So I just want to share some of those with you and just some of the ideas behind them. Hopefully it will help you with your trading and you can get some tips or, I don't know, something that you may not have learned before, or maybe you have, and we're just going to reinforce it. Let's see. If you're new to the channel, welcome firstly. It's great to have you here with us. Subscribe. Or think about subscribing, that'd be great. Hit the like button if you do like the video, and of course turn on notifications for future videos. So I'll just go over my one of my gold trades today. I have taken quite a few of them, to be honest with you, just taking advantage of this whole movement to the downside. One of the trades that I took was this double top pattern here, and I'll just give you my thought process behind it. This is on the 1 minute time frame. I'm not going to go into too much details how I trade the 1 minute time frame or some of the confluences that I use, because it might confuse you, and that's obviously the last thing that I want to do here. But one thing I noticed when taking this trade is that price creates an area. So understand this is an area where it's failing to continue to push higher off of the back of this movement to the upside. So when I see this information, what I'm thinking in the back of my head is that there's a depletion in some sort of bullish sentiment here. Bears are stepping into the markets, and we're now potentially looking for selling opportunities. What I need the market to do is take out some of these structural lows, just to indicate some sort of bearish sentiment. Now, granted, this is a breakout and a break back in, which doesn't really necessarily indicate anything other than indecision. But then what I'm looking for the market to do is create a level again to represent the same behavior that we've seen previously to the left. And then I'm looking for a pattern that I'm familiar with from key levels, whether there be double bottoms or double tops, to then look for an indication to take this trade. Now, as you can see here, we do have price creating what I like to call here a level where we see evidence of price failing to break in line with the previous behavior here to the left. And then we have confirmation where we have multiple wick rejections, indecision candles, bullish depletion candles, and a bearish momentum candles. And the minute this closed, I hit sell. And as you can see here, the idea was to run it back down to these lows. And for this trade, I was able to take 2R from the markets. Now, I'm not a big fan of using the daily time frame, but I just want to give you an indication of where the idea comes from here. You can see on the daily that we've been trapped in this range for a very long period of time. And usually the rule of thumb for me when trading ranges is as long as we have 2 points of contact from the high and from the low, then I'll classify that as a range. And the only time I'm looking to sell in that range is when price comes back to the structural high and or low. Now, what gold does is gold creates a lot of wicks more than any other symbols that you might be trading. What you'll find is on any strong bearish move, we get left a wick. On any strong bullish move, we get left a wick. And it just happens all the time, as you probably can see here. Now, if you're not used to trading gold, this might be very confusing to you. But if you're familiar with gold, then you'll probably be very aware that gold leaves lots of wicks behind, which means that if it leaves lots of wicks behind, then that's a clue that we can use to incorporate as part of a strategy. So with that being said, as I'm looking at the daily, I can see that there's multiple wick rejections, which means this is an area of reaction in the market. If price is not making highs above these wick rejection areas, then there's a high chance we're going to reject them as part of a range. So when I go down to the 1 minute time frame, I'm looking for the highest point, looking for the depletion in this bullish sentiment. I'm looking for a break of a structural low to indicate that the bears are in the market. And then I'm looking for that evidence and confirmation with my patterns to enter the trade. And here we managed to take 2R from the markets. Now, this was just one of many trades. I took another one back here. And I took a couple more on the way down, but just a very simple thought process. And if you can get that into the back of your minds, then you will find that you'll start seeing consistency, really, should I say. It does look messy, but understand the process and the thoughts behind it that was incorporated into entering this trade. Now, another trade that I took today was called out on the live trading session from the RoxFX Academy mentors. And this was a really nice trade. Bit gutted I didn't hold it down to the structural low here. I did have this 4H key level drawn in, knowing that this is where price is more likely to gravitate towards. But I had taken a few more trades at the time. I think it was a trade on gold. Then I was just happy to take 1R at partials, and then I took the 1R partials, and then I run the rest to 1 to 2. Should have held it for the rest, but it just is what it is. That's part of trading, and there's nothing you can do about it. But with this trade here, the idea, as you probably can see from the higher time frame analysis, is that we were identifying in the morning strong Swiss franc on the live session, should I say. We identified strong Swiss franc. We did also identify that the dollar was weakening. I think at the start, I said strengthening, didn't I? Didn't I? No, I meant it was weakening. So we had our eyes on pairs like pound USD, Euro USD, and then obviously USD Swiss franc here. And the idea was that we saw the sentiment in the market. This is the analysis from Sunday to identify the pullback and or the continuation back down to 91.90. That's exactly what's happened, but we're not talking about that now. But we can see this is just simple structure in the market that you should be familiar with if you watch my content enough. Bullish market structure to the upside, failing to break new highs, break of the brick wall, taking out structural lows here. Nice retest in the market. Then we had this continuation down. This was through the Asian session, and then this was moving into the London session. And then that's why I decided to take the trade, just following this bearish behavior in anticipation of price to come back to 91.90. Now, I didn't have to do that much analysis because it was done for me already by one of the mentors in the community who called out this trade idea, identifying the new lower lows and lower highs, price failing to close bullish with a strong wick rejection and a bearish sentiment close to the downside. And the idea was once this candle starts to break the lows of this structure, we should see the market continue down. So I was able to take this trade and win this trade. Thank you for the call. And that was just another one that I took today. Another trade that was called out on the live trading session this morning was these New Zealand dollar JPY sells. If you saw my gold trade, let's just go back to it. You'll see the double top bearish candle close continuation here, or shall we say reversal at this point. We go back to New Zealand dollar JPY, just another pattern that again is identical, which is price creating a level in the market and respecting that structure. And then we anticipate a break of this structure in anticipation of a continuation down. And it's a very powerful pattern. If you're not familiar with double tops and double bottoms, do some research on them, or maybe I can do a video on them. But it just really gives you nice confirmation of price creating a level, which we like to call evidence, and then price respecting that level, which we like to call confirmation. So there's no rushing into the trades really. It is just a matter of waiting patiently for those bearish candle closes and or bullish candle closes to be able to take advantage of that trade. And it happens all the time in the markets. You'll see here we have another double top, bearish candle close and a movement to the downside. You do have to pick your spots, obviously. But what I'm trying to highlight here, it is a very powerful pattern. And if you're not familiar with it, then I suggest you start looking at the markets and seeing what you can find. Another trade that was called today was these pound USD buys here. The idea was that if price can continue to trade above 33.28, which was a level of consolidation in the market, this is the major structural low and high from a high time frame perspective. And then we have a sentiment change, which is a bullish close. We have indication of a new form trend forming to the upside. Nice retest. And the idea is if price starts to break above this structure, then we'll see price continue back to this area here. So again, another very simple trade. The ways you can trade this is you can either look to wait for the break above and then look for the continuation with a stop loss below the previous candle and or key level. And if you want to be super conservative, then it's below the high and low. If you don't want to trade like that, then what you can identify is a strong bullish candle into the key level. And then you anticipate the breakout with a stop loss below the previous candle, which is more aggressive, below the previous candle, which is more passive. And then here is just super, super safe. And as you can see, the market continues to fly up. That was just all obviously in line with the USD weakness as well. And if I just highlight this area here, what you'll notice when you go down to, let's say, the 4H time frame, is you'll identify that the overall sentiment in the market or the previous candle is the candle that reacted to the bottom of a range here again. We had a bullish behavior. We had a slight pause. We didn't engulf. We traded between the range of the previous candle. And the idea is if this candle starts to break above the high, then we anticipate price to find its way back to a key level before we find some sort of reaction and then have a bearish move back down to the lows again at some point. So very simple trading idea. And a process here. There's nothing magical happening other than the simple fact that we're able to identify them and then able to get into them at the right times. This was the buys. Oh, yes. Okay. And another pair that we took a look at today, and a really nice call here was on this EURUSD. Thing with EURUSD, it just continues to fly to the upside, so it's very hard to get an entry. But I just want to share this with you. We have some major key levels here that we have drawn in. And look at this. You have 1, 2, 3, 4 points to identify an uptrend. And then look at this simple trade in here. You just have a simple break, a retest of the structure, bullish candle close, stop loss below or the key level here. And you just look to ride this back up to a major structural high, or you wait for price to push into the level and you take the breakout here into the level and you take the breakout, or you just simply wait for the breakout, stop loss below, safer stop loss, and then just continue to ride this up for as long as need be. And once you get information that price is failing to break, then you can just shut down and close or trail your stops and be done with it. There was a trader in the community, absolutely phenomenal trader she is. Today she took advantage of this whole move to the upside. And she managed to bank 11R on this trade using some really skillful techniques with the 15-minute and 1-minute time frame. Obviously, I'm not going to discuss that, but it was an absolute phenomenal trade. I think she got stopped out once on the trade for 1R and then managed to bank 11R on the whole position finally. So 10R in total. Very nice trade, to say the least. And then we have here a few other trades from the members in the community. This was the EURUSD trades here, just a simple break and retest, as you can see. Bullish close, anticipating a bullish continuation, and a really nice stack position here from KSD. Absolute phenomenal trader, fearless to say the least. Then we have another trader here who is simply using the 5-minute time frame, have a key level in the market where you're looking for price to break, retest, bearish candle close, stop loss well out the way in anticipation of a continuation down, clear traffic, as you can see here to the left. And that was a really phenomenal trade today. We also had the US dollar Swiss franc sells. As was mentioned on the live trading session, you have a really nice bearish candle close below the levels here. You're anticipating a continuation. I think he got saved by the bell here with this one. He didn't say he lost it. And then you have a continuation down. Now, with this stop loss placement here, it's a bit just where you want to put it. Normally, we want to put it above here to make sure that this is the level, and or if you're using the key level, then actually, I guess that's not too bad of a stop loss placement. We have another trader here, Demand, phenomenal 1-minute trader. Just identify this bullish change, strong bullish sentiment here. Compare the ranges of this move to what's happened previously. We can definitely tell that the bulls are in control in the markets. And just using intermediate levels here to identify where price is pushing bearish into, stalling, then bullish close, and then entering with momentum in anticipation for price to go up. And then we have a little bit more of an advanced technique here, which is an intraday high and low, and looking for the retest and continuation and of the structure. So really nice trade here from the man. Here is Rock's trade. What do we think about this one? It was a 3-pip stop loss. Actually, I forgot to mention this. It's funny that this is here. I can promise you it won't put here on purpose. This really strong bullish candle to the upside, depleting and failing and then flipping bearish is usually a very strong sign that we're going to see a continuation to the downside. So just remember that next time, anytime you see these very strong wick rejections that fail, usually indicates a strong movement in the opposite direction. So another little tip there for you. Another trade here on Euro Aussie dollar. Euro was doing good things today. So this was a good shout. We see here a major key level in the market. Price is holding that. Nice bullish close. And this is a buy stop order here. Very well held and nice take profit from this trader here. Parkic, if I mention all the names, I'll probably get them wrong. And yeah, well, is what it is. Now, this was from Abdul. We did question this trade just a little bit. This is a major key level. Reason why is because we don't want traders to just immediately take trades from key levels. We want them to wait for candle closes in the direction they anticipate the market to go, and or wick rejections in decision candles, then enter the market in anticipation of continuation down. But nonetheless, Abdul knows how to trade. He's a good trader. We see the reaction here. And then the idea is if it breaks below the previous candle, we make a new low, at least back to this point. But you can see by this time he was out at 1R, which is really good. I don't know why I'm here again. Okay. This was another trade here. Just a very nice pound CAD trade. Where we see price breaking above in the 15-minute, multiple wick rejections, and then this idea is just a buy stop based on a break and retest. It did come back into drawdown a little bit, but trust in the process that price will get back to some of these highs here in line with the overall behavior, which is indicating some sort of bullish sentiment, and a very nice take profit here from Nubdalu. Okay. And then the final one we'll take a look at is from my man, Luigi here. This was a phenomenal trade on the pound trade that we just looked at now. Key 11 in the market, strong bullish sentiment. We have price breaking above the level. Look, he didn't enter immediately. He waited patiently for the candle close and then looked to take the buy once price broke above that level in anticipation of a new higher high here in line with the previous behavior. So Luigi, bang on there, brother. Really, really nice trade. So that was today. There was many opportunities in the market, whether you took gold, New Zealand dollar, JPY, you took advantage of Swiss franc strength and or USD weakness. Pound also provided opportunities. Even now to the downside, it hasn't been too bad. I just want to say that there's always opportunities in the markets, traders. Be patient, wait for them to develop. And once they do, execute over and over again. And eventually the numbers will play out for you. If you enjoyed this video, again, please just very briefly smash that like button, turn on notifications, subscribe if you're new to the channel. And as I always say, continue to trust the process.